Welcome to Master Trader Live, where you can learn simple market analysis to make money investing and trading. I'm Greg Capra, and today I'm going to discuss how you can buy a stock like this at a turning point and why. Let's take a look at it. Now, as prices were pulling back here today, by the way, this is JP Morgan is the stock. I actually posted it a week or two ago that it was ready to move higher. But today I want to talk about the fact how this pulled back here. It was pretty whippy in a downtrend. You can see it's a 2-minute chart. But what I want to talk to you about is how you can buy a stock like this that's moving lower near the turning point before it moves up like this. So first you have to have a bias as to why you even think it might be able to turn up like this, and then you can look at the price patterns that are forming that are in alignment with that. So let's take a look at it. So at this point, there's no way I'm interested in buying this. We just have a whippy sideways consolidation here. And now as it's moving down, we start to look at the individual candles here that are forming. We look at it in a really simple way. This is what we call a bottoming tail candle, meaning it went down and it came back up again. That suggests that buyers are stepping up to the plate. Now, when it's in a downtrend, a candle like this obviously can fail, and a lot of times that they do when it's trending down. So why did JP Morgan turn around here? Why would I even think that it might begin to turn around here? We'll get to that. But once it has begun to turn around, and then I'm looking for price action that's in alignment with that bias. Now, this area, this sideways consolidation here, clearly is an area where longs got caught. Someone was buying here even after it dropped like it did. And then it went lower, and when prices came back up to it, they get to get their money back if they choose to sell. Now I'm interested in how prices react to those sellers. And what we see happening here is that it went sideways in this area where those sellers were stepping up. And I know that they were selling because the momentum to the upside stalled. And now as it began to go sideways here, this tells me that buyers keep coming up and saying, give me your shares. I'll take it. I'll take whatever you have. But why? Why would they do that in a stock that was moving down like this? And why might it react and continue to go back up again? And the answer to that is having a bias from a higher time frame that would suggest that this is possible. In addition, we then look for a point within that higher time frame where this type of price action is likely to happen. And for intraday analysis, I like the 60-minute before I go down to that lower time frame. And now you can see very clearly why I would think that prices, and this was actually the launching pad. If you look for the video, you'll find it, where I suggested that JP Morgan was going to go up. And after it did, it starts forming higher highs and higher lows and so on. So now when it came back to the area of support, what was resistance becomes support, this is the point in time where it should begin to turn. And when you look at it like this, it's actually rather simple what's happening here. It's in an uptrend, it's in an area of support, and then as prices come down to that area to support in the smaller time frame that I'm looking at, I look for the exact type of price analysis that I just showed you. I hope that helps. Have a great weekend.